I'm Sarah Borkson-Keeter with NAREITsREIT.com, and I'm here in Las Vegas for REITWorld 2015, NAREIT's annual convention for all things REIT. I'm joined today by Neil Shah, President and COO of Hersha Hospitality Trust. Welcome, Neil.
Thank you, Sarah.
So how would you describe fundamentals in Hersha's core markets, and are any markets performing beyond expectations?
You know, Sarah, right now it is a great time to be a hotel owner really across the country. We're having really strong demand fundamentals, very little supply across the country. And so we feel like it's one of the best times that it's been to be a hotel owner. There's been better times to issue equity, there's been better times to get financing, but it's hard to find a better time to simply run hotels and drive EBITDA growth because you have great fundamental backdrop. As we look at our markets, we're very focused on 6 markets, and beyond kind of choosing those markets for their fundamental attributes, we also have made it a point to really develop clusters in those markets where we have an advantage in operating as well as an advantage in sourcing new transactions. So with that in mind, you know, we've had a great year in the last year with double-digit growth coming out of Los Angeles, Southern California, Northern California, Miami, Boston. I think the market that for us in our marketplaces, New York and Washington have been the slower growth markets because they have had new demand, new supply to kind of confront, as well as the government recovery in DC. I think DC is the market that we believe has the opportunity to really surprise to the upside in the coming years. We think the government recovery is strong, the convention calendar is very strong ahead. And so across the country, we feel really good about the hotel space. In our existing markets, we're still looking at opportunities to add to our positions. And despite the headlines in some of these more moderate growth markets in the Northeast, we still see great opportunity there and some opportunity to outperform.
And talking of acquisitions, recently you purchased the St. Gregory Hotel in Washington for $57 million.
Yes.
How difficult is it to find a property like that?
It is difficult. It is challenging to find great high-quality assets in these kinds of major gateway markets that still have an opportunity to really create value from. It is difficult, but I would say that it's not nearly as difficult as one might imagine. There is a wall of capital. There is a lot of international interest in these major markets. There is a lot of private equity interest. But on the other hand, the lodging marketplace is very large, and it remains in a highly fragmented ownership structure throughout the industry. And so the St. Gregory was an example of a private owner, not really a hotel player, but was a real estate owner that had converted an office building, had done a very nice job, has owned it for 10 to 15 years. What we loved about the opportunity was that it was in one of our core markets. It was a corner location. It was a well-kept hotel, but not a particularly optimized hotel from a managerial standpoint. And so our strategy there has been to primarily kind of change the market mix and attract higher-paying corporate guests and really orient the business and the strategy around that.
And as you look across the Hersha portfolio, is there a property that's particularly notable to you in terms of either historic significance or what it means to the community?
If I were to kind of distinguish one from the standpoint of its kind of community involvement and its real kind of sense of being a part of the context of this neighborhood, I would look to the Hyatt Union Square. This was a project that we built across the last several years. We opened it a couple of years ago, now today. Everything about that asset is a part of that kind of Union Square neighborhood. Union Square is a neighborhood near Greenwich Village in New York City, particularly well known for the green market in the just outside of the hotel. And so we focused on the neighborhood when we developed the hotel. We kept a limestone facade, although it wasn't historically certified, and it would have been more efficient to build a brand new box. The limestone facade really did help us to integrate the building into the neighborhood and into the street wall. We're a corner location. This location has over the years been a series of very popular nightclubs. It's not exactly the market we're going for, but it is that historical context, and it was helpful to keep that piece of it.
Great. Well, thank you so much, Neil, for your time.
Thank you, Sarah.
And for more news and information on REITWorld 2015, be sure to visit REIT.com.